Okay, hello everyone, it's Michael Valtos here, and welcome to my Orderflows market analysis from Friday, February 10th, 2017. Before I jump in, first a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract, or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so Friday, February 10th, it was kind of an interesting day because, early on there were signs that we can move higher. And, what are these signs? Well, after the cash open, right? Cash opens at 8:30. Between 8:40 and almost 9 o'clock, 8:40 to 8:50, we ran. This is a three-range mini chart, and we started running up into the highs. We'd get the high, have a divergence. That's this little arrow here, arrow here, arrow here, and within about 15 minutes, we had 4 equal or new highs. This was a new high here. This one was the first new high, and then a new high here at 8:46, and then we hit it again. We equal the high, and you've got the negative deltas, so it's giving you the divergence. So it's an equal high or new high with the negative delta. That's what the divergence is. And with the down candle, we're opened up here, closed down here, so it's a red candle. And usually, right, I've talked about this before, on days where the market is going to trend higher or trend lower, you'll often get groups of imbalances, not imbalances, divergences rather. And if they happen, in quick succession, like here, you can see within 15 minutes, you got 4 already on this 3-range chart. To me, that's a sign that, we could be bumping up higher a little bit later in the session. So, with that in mind, I'll be looking for some signs that we can possibly start to go higher. And, after this 4th divergence here, we do come off a little bit, not much. We go from 23.10 down to 0.8, so about a 2-point move. Kind of goes sideways. We've got point of controls all in the same area there. And here, this is the price rejector giving a buy. And we start working our way back up again. Now, again, am I convinced yet that we're going to break out through new highs? Not yet. It has the signs. We're still hanging around the high of the day. It's 9:30, pushing 9:20. I want to see more signs. And then, we start to come off. We come up within 2 ticks of the high here. Come off. We get this stacked imbalance, which is encouraging. But, when you're looking at the numbers here, 146, 121, 440, those are kind of pathetic numbers in the sense of, look at some of these numbers here when we're trading, 2,500, 1,200, 1,300, even when we're at the high, 4,000 here, 1,200, 2,900, 1,400, 2,000, 2,000. And here you're getting a stacked imbalance with very small numbers. So I know that this bar moved very quick. So I'm not necessarily convinced that, hey, this market all of a sudden picked up steam and it's going to start to turn around. And then what happens? It comes right back down with a red candle here, negative delta. And we do go a little bit lower. We hit this area down here. You got some volume in here, 1,400. That's encouraging. And we start to work our way back up. And then we get up here, right up here near the high. And we get another stacked imbalance. This time, the numbers are much better. Here we had 146, 121, 443. Here you got 700, 1,500, 1,300. That's stronger. That's, 3 or 4 times stronger than what you had back here. Well, I'll say it's more than that actually, but at a minimum, 400 against 1,300. So this one is more encouraging than this one. And then the next bar right after it, again, you still got the imbalances spilling over. 379, 2538. I always like to get imbalances when you're breaking through new highs because that's a sign that there's new buying coming in. That's going to help move the market higher. And you got a ratio here. This is a bullish ratio. So here you have the stacked imbalance. I always say, look for the ratio afterwards. And here you get it in this bar, a ratio of 45. It's a blue number, which is what you want to be looking at. And, we do go higher, hit this new high, got a divergence again, come off. We hit another new high, again, another divergence. So again, you're starting to hit these highs, getting divergences, which is, to me, again, another sign that we can still go a little bit higher. We're still hitting those highs. On a trending market, you're going to get a lot of divergences. And again, don't be taking every single divergence and getting short on this day, because you'd have all these losing trades. I mean, sure, you could get short here and you can get a little something, but I don't want to be trying to scalp for a half a point. I'd rather be looking for solid signs like this, where you got the stacked imbalance, you got the ratio afterwards, and then the market is giving you the signs that we're going to go higher. I mean, it does pull back down in here. Here you get this stacked imbalance, negative, but it just goes sideways. Again, it's a stacked selling imbalance, which should be negative, and you come right back with a bullish ratio. And you can see we just spend the next 4 or 5 bars inside there. And here we hit the new high. You got a ratio. We don't have a divergence. Still a nice positive delta. Here you got divergence. And then you see that it's starting to pick up again. We're getting these imbalances again, 2,800, 2,900, 4,000. And, I mean, these are strong numbers. And here, we just keep going up, 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 making these new highs. Again, some divergences. And, it would just keep going higher. Again, I'm not going to say we're going to go higher all the way to the close of the day. I think around, around this time is right around where we made our high of the day. But, the signs were there early, back at 8:40. This first, going back here. This area in here, 850, was a early sign that, we could be, we could be trending on this day. We could be going higher, which we did. Okay, so the next market I want to talk about is the bonds. This is my bond. It's a 4-range chart, okay? And, 7 o'clock in the morning, we were making new lows, hitting these new lows. We have a divergence with a ratio, which to me is a very bullish sign. In this case, it's a buying divergence and a bullish ratio. But what happens right in the next bar, point of control right at the top, you've got a bearish ratio. And, the reason for taking this trade is gone already. I mean, if you're willing to, you could give it one more bar. But honestly, when I get a bullish sign and it's followed up immediately with a bearish sign, I'm not that interested in staying in the trade. And then we get another divergence in the next bar. No bullish ratio here, just a normal ratio. And, we're just going sideways. So again, really quick, within 15 minutes, you already got two divergences, okay, that we've hit. So, I'm going to be watching to see if we're going to make new lows, and we do. Again, I'm not saying, get short because we got 2 divergences, but, we got the first divergence, which was very bullish, with the ratio afterwards, with the ratio in the bar, but then it's met with a bearish ratio here. So, these two, sort of, got a bullish ratio, bearish ratio. I'm not going to say cancel each other out, but, the reason for getting long off this bar is gone in the next bar. So you got basically two divergences, which aren't necessarily working out. And then you get in 7:30 and we just start trading lower. We get another divergence down here at this low. This is the delta surge given a buy actually here, this green. But this is a divergence, okay, and there's no ratio. And honestly, at this point, I'm thinking, hey, maybe we could start moving higher. We got a divergence in this bar. We don't have a ratio, but I always like to look to the next bar to see if there is a ratio. And then you get one here, and you got the delta surge, given a buy. But this bar right here really throws the monkey wrench in it, because you got a single print, you've got a bearish ratio right after 2 bullish things. So, I'm a bit hesitant. And, as a result, we do come off a little bit lower, make this new low, get another divergence. Then you got the same thing setting up here, more or less, that you had earlier. Here you've got the divergence. And then in the next bar, you've got the bullish ratio with the single print, just like you have here. You got the divergence, and you got the single print with a bullish ratio, this blue number. Okay, but the problem is in this bar, it's negative. All right, you got this bearish ratio with the single print. But here, you just have a doji. So here, you've got the divergence, you've got the ratio afterwards. And, this one, is very similar here, except you don't have this bearish thing hanging over. And watch what happens. You start working your way up. Yeah, you run into this bar up here. Okay, but it's still going higher. This time the delta is a little bit smaller. Here it's negative 54. Here it's minus 200. Watch what happens the next bar. Compare it here. we started coming off minus 200 negative delta here, minus 1,000, but here you got minus 54, so it's kind of weak, and it comes right back with the next bar, positive delta of 1427. So, if you're sitting in this bar and you're saying, you're not yet convinced, because you have this, even though you have bullish sign, even here is kind of, this is nice to see, that we're going to start moving away from this low. Then you get here with this nice strong delta. That should be telling you, hey, this market is ready to start moving higher. And you got a couple nice solid imbalances in there, 700, 400. And then you can see how it just makes it start making its move, higher over the next, the next few bars. So, from around the 18 level, we get all the way up to, 27. We do come back down again to the 16 area before mounting another run up. This here is the delta surge. It just sort of goes sideways this time. Doesn't really work out. This I thought was kind of interesting. You've got the point of control right on the bottom. I always like these bars where you have the point of control, either if it's green bar right on the bottom, or the red bar that you saw earlier here right on the top. This I find to be very bearish in this case. It did go down before it turned around, come back up, and then heading down. But this one, this just stops the move. You can see you hit it here. The first time it traded 66, second time 364. Even when offered, it traded 298. So it's 26, 27, but the sixes never trade. And people say, well, you got unfinished business there. Look for it to come back in. I'm not even sure if it ever did come back there. Maybe later in the day. But for now, I'm looking at this as some stopping activity in the market, and you can see it. I think it did come back here. Let's take a look here. Yeah, I mean, it came back at just before 1 o'clock, traded 4 lots, then went through it. But for the short term, immediate term, this level, it held nicely. You could have got a minimum of 5 ticks out of that trade right there. So watch for those point of controls, at the bottom of the bars, or at the top of bars, for a bottom for a green candle, and at the top for a red candle. Okay, just real quick, I was going to show you a couple other charts. This is the transition, and this is a euro currency. It's a 987 tick chart, and you have a sell right here. I mean, it did go down, come back up, got, probably would have stopped you out, honestly. It's a little bit too further past the entry point for me. Then again, just sort of hit up there, then came off. I think that would have stopped me out. I didn't trade that. I didn't trade on Friday. My trading has sort of been stopped for now. I just got a lot of other things going on. Even the trading room I've had to stop for now. I'll probably restart it up in case, I know people are asking me, they miss it. But yeah, I just got so much on my plate right now. I need to take a break. But, later in the day, here you get a nice buy, and it's just straight up. That was it on this euro currency there. Let me see if I got someone go through some other charts really quick. Crude oil. What is this? This is the March crude 987 tick chart. I see nothing. So you got a buy here. It does come right back down. Gets a little bit sort of violates. So you're getting long around 87. I mean, come back down. Maybe 10 ticks, then make the move. What can you do? It wasn't that great a day on crude as far as price movement. You really needed to be getting in earlier in that day. Even this day, I didn't really sit down in front of the charts until after 7 o'clock. Let's take a look at what else we got here. Euro currency. I know there was something I wanted to talk about. This is the, these are the indicators. There's several indicators on this chart. Again, I'm just showing them on these bar charts because it's easier to see. This is the U-turn, actually, here, this hash like that. And, people have been putting it on and trying to sort of figure out, what's a good setting. This is a setting of 3 and 25. I did a video the other day, last week, of, what I think is some decent settings that you could start with and play around. Does it pick every swing? No. Here it picks, okay, I mean, just going back to 8 o'clock here. I don't, there's, I mean, we can go back earlier here. I don't have it at 3, but, starting here, does it pick this low? No. Does it pick this low? Yes. Does it pick that high? Yes. Does it pick this swing low? Yes. Here, these are kind of equal. But then, it picks this one, swing up to there, swing to there. This one, no, it doesn't work out. This one, yes. This one, no. These kind of mix. This one, no. This one, no. This one, yes. This one, double, recent double high. Again, this is an 8 range chart, so each bar is going to be 9 ticks. So even if you get 1 or 2 bars out of a move, then that's good already. But it picks this swing high down to this kind of swing low where it just goes sideways. Then it picks this swing low. Some people want to pick every single, oh, it has to pick this and this. I don't want this. But sometimes the market hasn't found its low, and it's still searching for its low. That's why you get these little moves like that in there. Just looking, there's one other chart I wanted to show you guys. Or maybe a couple. Give me a second. Let me pull it up here. Where is it? Okay, this is the transition. This is a Euro currency 1-minute chart. Okay, and it's the settings of 3, 100, 400. These are the settings I talk about in that video. And going back here, I mean, again, I didn't turn my system on until about 7. Look at this. Okay, there's 3 signals this day. So it's giving you a buy down here near this low. Where is it here? Somewhere in here. Okay, so it's like 106.25 and a half. I mean, it does trade down to 21. Okay, so you take a little bit of heat. Okay, so from 5.5 down to 21. Okay, what is that? 9 ticks, because this trades in half ticks. So before that would be about 5 ticks. Now it's 9 ticks. But look at that. Are you willing to risk 5 ticks, 10 ticks here to catch a move like this from call it 25, it trades up to 50, it gets up here, even to 40, okay, before it comes back down here to 35. So, say you took it all the way up here and you took, and you said, I'm going to go higher, I'm going to be greedy, and you take some heat and it comes back down to 35 or you cover it, that's already 10 ticks, okay. And then again here, right, this is a little bit later, you get this sell signal up here. It still hasn't quite formed its high. It's still forming a high. Okay, so again, what the transition does is, it's looking for these areas where the market is moving from a supply-driven market to a demand-driven market, or vice versa. In this case, we're in, here we had been going down, so we're in a supply-driven market. Supply is driving the market till demand comes in, right? The market finds the demand here, and then it makes its move back up here, okay? Then it finds an area up here where it's going to transition now from, this was a demand-driven market because we're going higher, demand is driving the market higher, to a supply-driven market. And you can see it right here, and we start come off here. So again, it's a move from, call it the 60 area, 106.60 area, somewhere in here. I mean, yeah, you probably could have sold a little bit higher, but, we'll call it 60. And it makes its move down to 50, even below, it actually gets down here to 40. I'm not going to say, oh yeah, you would have covered it down here. Of course not. You'd probably be looking to cover it somewhere after it makes this big probe down and comes back. Honestly, you'd be looking to cover it somewhere back in here, 47, 48. If you're trailing your stop, we get below 50, you should have a stop at 50. And then, so we work our way back up. It doesn't give a buy signal here. Okay, maybe it's not easily read in the order flow. Okay, I mean, these indicators, yeah, they pick turning points, but they're not going to pick every single turning point. People expect you to be able to pick every single turning point. Sometimes, the clues are not there in the order flow. That's just the reality of it. But when it's there, it's going to pick it up, okay? And it picks it up again here that we're moving back into a supply-driven market. And, if you could get short somewhere in here, we'll call it 50, I don't know, 57, 58, it goes back down to the 40s. So, again, that's it. 3 trades this day. There's 3 trades. 1, 2, 3 from, I mean, again, I didn't have my system on at 3 in the morning, but, when I had it on since 7, it reads the data as it comes in. So don't install it on your chart thinking it's going to plot on historical data. No, it's got to read the data as it's coming in. That's what order flow is about. It's about reading the trades that are coming in real time, not about plotting them on historical data, because that data doesn't accurately reflect what the trading that's going on. So again, 3 trades, 1, 2, 3. Okay, and that's just a 1-minute chart. So, again, I'll see if there's anything else. I do like to talk about the mini Dow. I've become attracted to trading the mini Dow, and I think it's a great contract because, especially now, it's quite I'll say volatile, but it moves around much nicer, I think, than the S&Ps. And this is, again, this is the transition indicator. Again, if you're trading mini Dow, wait till the cash open. There's no point in trading it in the pre-market. I mean, you can, but it's best if you just wait for the cash open. And what I like about them is the 100-tick chart. So it's, mini Dow doesn't trade as much volume as the E-minis, but it's still a decent contract, and it gets nice moves. So this is the transition. This is a 100-tick chart, same setting for 3, 100, 400. Okay, so cash opens at 8:30. We sort of go sideways here. Here you get a sell. It's a little bit of something here. You get a buy that fails. Here you start getting another sell. Okay, so maybe you're getting in somewhere around the 85 level, and it trades all the way down to the 70s. Then here you get a nice buy here around the 75 area. You'll be getting in here somewhere in here. Makes a move back up to the 90s. So you get this move down, you get this move up. This one failed. This one is kind of crappy in here. It sort of gives you the buy, then comes back with the sell. So you're probably scrambling in there, and then you take a loss there. You take a loss on this one, this one, this one, this one. Well, this one, just sort of goes sideways. If it's going sideways after a while, chances are it's not going to necessarily work out. Here again, kind of sideways on you. So honestly, you're taking a few losses here. So you're taking 1, 2, 3, 4, 5, 6, maybe 7. Okay, it's discouraging. I admit it is discouraging, but that's trading. But the key is to take small losses. And what I mean by small losses is you're getting long in here in this bar. This is the signal bar, but this is the bar you'd be getting long at 97. Maybe you got a 7-tick, 8-tick, 10-tick stop. Okay, so this one probably wouldn't have stopped you out, and you could have gotten out around broke even. But you should have a stop in there, whether it's 5 ticks, 10 ticks. 5 ticks is kind of tight actually. So you're getting along here at 06. 5 ticks would be down here at 01, which is right here. Okay, it stops you out. But again, what you want is to have those tight stops, 5 ticks, 8 ticks, 10 ticks even. 10 ticks for me would be about as wide as I go on this contract, because you want to stick around for this trade. So you're getting in at 95, trades all the way up, gets all the way up to 30. I'm not gonna say 35, but we'll call it we'll call it easily 25. So from 95 to 25 is 30 ticks. Okay, so if you're risking 6 ticks in here, maybe some of these you could have finessed and sort of maybe broke even on, or take the full 6-tick loss. So you have 1, 2, 3, 4, 5, 6, 7 trades at minus 6 ticks. We'll call it 7 ticks. Okay, so 7 times 7 is 49. This one just gave you 30 ticks right there. You take another trade in here, maybe you get something out of it. We'll call this one a scratch. Then you get this sell here, so you're getting short somewhere around 43, 40, call it 42, right here. But realistically, you're probably getting around 43, but we'll call it 42, and it makes it move all the way down to to 22. This is 22 here. It actually just sort of stalls, then gives you a buy here. So we'll call it 22. So that's 20 ticks. So that's 30 ticks, on this move earlier. And then 20 ticks. That's 50 ticks right there. So, you got back what you lost right there. And, you get another buy here, which I don't know if it would have stopped you out. But also you got to take into account, these earlier trades. This trade that you had here, you could have had at least, from 88 down to, the 70s. All right, so and then you have this trade here, so this is about 15, 20 ticks. This trade here is, from what you want to call it, 73 up to 93. That's another 20 ticks. So that's 40 ticks right there. Who knows what you would have had in this, but the idea is to end the day ahead. And if you're catching, if you're just risking 6, 7, 8 ticks a trade, but you can see here you're getting trades 20, 30 ticks in profit, that's what you want. Everyone says, oh, you got to have a 4-to-1 risk reward ratio. Yeah, you'd like to have that. The reality is, oftentimes you're just happy to get come out of trade a tick ahead at a minimum. So again, this is the transition indicator, which you can see on my website. But again, I'm showing you it suffered in here. Sometimes that's what happens. Sometimes it runs through these things, these periods where there's a lot of crap, but it also picks the nice trends here like that. I mean, and you saw the euro currency earlier here. Okay, it didn't chop you up, and this day was the textbook beautiful day to trade, and you can't do anything wrong. So in short, just thanks for watching this. To learn more about these indicators and order flow, I think these indicators do work with a bar chart. They work with an order flow chart. To get the most value out of it, you should be trading with an order flow chart. Visit my website, orderflows.com, and learn more about the indicators. And if you pick up the software, now you'll get the indicators thrown in. If you're an existing user, just shoot me an email if you're interested in these indicators, and you'll get a discount on them, which basically just covers some of my programming costs. So again, thanks for watching this, and visit my website, orderflows.com. So thank you, and see you on the inside.